Okay, so good morning. I see we have 3 people online already, Elizabeth, Ilaria, and Ruth. Welcome to the webinar. Just to let you know that we will wait for the rest of the participants to tune in, and at 10:30 we will start the session. Lena, perhaps you want to put the presentation in presentation mode so we see, so it's
yeah, of course. My mouse has a bit of, okay, great.
Okay, excellent. Excellent. The session is being recorded already, so we are on, and we're just going to wait a few minutes before kickstarting. For those of you tuning in, good morning. Welcome to the webinar. Just to let you know, we're waiting a few minutes for all attendees to connect. And once we have most of our participants online, then we will kick off the webinar. Okay, I see a lot of people tuning in. This is excellent. I'll give it one more minute, and then we kick off today's session. everybody tuning in to mute their microphones, please? This will help with the audio. Okay, excellent. Okay, so it's 9:32. I see that there are a lot of participants so far, so I think we can go ahead and start today's session. So good morning. Welcome to the Social Impact Fund's Reverse Pitching webinar. I am Claire-Elisa Camilleri. I work for EBN and I co-manage the Social Impact Special Interest Group at EBN, where the idea is to provide members with greater opportunities within the social impact sector. And this year, as part of the final event of the Social Challenges platform, we began a collaboration with EVPA, where essentially we started to link and connect our members to their members, which are social impact funds. And from the results of this first matchmaking event we had in February, we identified a clear value in the connection between our two networks. And so this is a follow-up activity that we have organized where hopefully we will provide a greater value and continue to organize more in the future. So I will be your moderator for today. The structure that we're going to follow is the following. So I will now give the floor to Lena Juliet from EVPA. She will briefly present the network to our members, so you can get an idea of who they are and how they work. And from there, Lena will, Julie will present our speakers for today. They will each have 20 minutes to present their social impact fund. And at 12, we will open the floor for discussions. And here is where we encourage you to ask questions, doubts, anything that that you have, that you are curious about understanding from the presentations. So in terms of housekeeping, I would kindly ask you to keep all of your microphones in mute. As you have questions, please write them down either in the chat or on a piece of paper. And once we open the discussions, then we will be able to unmute speakers. And I would say put your hand up, raise your hand, and we can unmute so that we can maintain a order in the house. And that's that. So at this point, I will pass on the floor to Julie, and we can kickstart today's session.
Yes. Good morning, everyone. Very nice to be here. I'm joined by Lena, my colleague at EVPA, and me, myself, I'm Julie, Community Officer. So the European Venture Philanthropy is a network of investors, and more on that later. But so venture philanthropy. Give me a quick, yeah. So what is venture philanthropy? It is a high engagement and long-term approach to generating societal impact. And it is an approach that EVPA coined 15 years ago and exists out of three pillars, the three main pillars of venture philanthropy and social investments. The first being tailored financing, whereby this is a process where a social investor looks for the most suitable and most adapted financial instrument to support the investee or the social purpose organization, which can be an NGO or a social business. And so the choice of financial instruments used always depends on the specific needs and the characteristics of this social enterprise or investee. In this case, so the second pillar is organizational support, or what we call non-financial support, and this is any other service that the investor provides to the investee, and this can be around capacity building, developing skills, improving structures or processes, so anything that is support that is non-financial. And then last but definitely not least, the third pillar of venture philanthropy and social investment is the impact measurement and management. And this is actually really crucial to this social investing. It means it's managing and measuring the impact in order to maximize and optimize it. So in venture philanthropy and social investment, the investor always has a responsibility towards its investee to support them in measuring and managing their own impact. So what you see before you here is a graph, is the classical investment model. It gives the structure of where the venture philanthropy organization and social investors are based. You can see here that venture philanthropy organizations and social investors act as a vehicle, really. They channel funding coming from other investors or co-investors, etc., going to social purpose organizations, which can be NGOs or social enterprises or social businesses, etc. So and it's then the social purpose organizations that generate the social impact as a return to the venture philanthropy organization. So it's really these two organizations today, FASE and SI2 Fund, that are VPO-SI organizations, venture philanthropy organizations or social investors that provide financing and non-financial support to social purpose organizations. So that's a bit about venture philanthropy and social investing. What does EVPA do in all of this? EVPA tries to gather all these investors and grant makers and social investors into a community where they can learn from each other, share best practices, etc. EVPA has been launched in 2004, so that means that this year we're celebrating our 15th anniversary, and we'll do that in a very big event in November in The Hague. So The Hague will really be the place to be for everyone who's impact driven, and it's a joint event together with Impact Startup Fest, which collects thousands of impact makers from all over the world. So save the date. So EVPA is a community of 285 members, and 2 of them are joining us today, which are FASE and SI2 Fund. We're very proud to have them in our database, in our membership base, because they're very, very advanced in what they do, in social investing that they do. First up will be Martin Haan from FASE, followed by Pieter Oostlander and Timothy Lambert from SI2 Fund. And they are really experienced with social investing, and they are the ones that you come in contact to when looking for social finance or have questions regarding social finance. But without any further ado, I'll give the floor to Martin Haan from FASE, the financing agency for social entrepreneurship.
Great.
Just change the screen a bit and give Martin his presentation. Yeah.
So we are right on time. Martin, it's 10:40. You have until 11 to present. And after this, we will give the floor to Tim and Peter.
Okay, great. Good morning, everybody. I hope you can hear me well.
We can. We assume the rest can as well, but we've muted them.
Good.
So go ahead.
Good. No need for show of hands. So good morning. It's a pleasure to be here, and thank you for the opportunity to present ourselves and give you a little insight into what we do. Maybe briefly, FASE is based in Germany, but we pretty much have a pan-European approach. So we are very happy to be partnering with EVPA and EBN on this journey. And for us, it's very important to really look beyond Germany and beyond the German-speaking countries where we're currently operating. And we'll talk a little bit more about this in our presentation. Maybe if we go to the next slide. Perfect. Just showing you a little bit about the topics we want to briefly cover this morning. I have very little time, so I will talk quite fast. I hope you can hear me. So basically the first section is a quick introduction about social finance to give you, especially those of you who may not deal with this on a day-to-day basis, to give you a better understanding of what social finance means and where we're sort of coming from. Section 2 is about FASE, where we are, where we're coming from, what our background is, what we have done so far, and what we're basically contributing for social enterprises. Section 3 is giving some considerations in terms of the financial structuring, to give you some examples of how financial structuring can be applied in innovative ways to support social enterprises. Section 4 gives you some example cases of projects we have done in the past, of where we have specifically funded social enterprises, and to give you a flavor of the kinds of businesses that we support. And then Section 5, I think, is also quite important for you and for our future potential collaboration with each of you, which is to understand what kind of businesses and projects we are looking for, so we have the best possible match. And then hopefully we have a good basis for a conversation. Next slide. So very briefly, I think some of you may know this quite well, others maybe not, so it's kind of hard to find the middle ground, but basically FASE is exclusively and specifically focused on supporting social enterprises. In one sentence, FASE is helping social enterprises to basically with growth funding, and we'll talk more about that. But what are social enterprises? Social enterprises are basically businesses that try to solve a problem in society. So it is very much an intersection between the business world and the social world. And while this is quite a small segment in society, it is quite fast growing, and it is a very important one because it takes care of things that many governments, even though they may want to do this and should do this, but they are not able or really capable of doing this. And at the same time, they are taking care of things that businesses with a pure profit sense may not look at as something that's worthwhile doing or profitable doing. And I think therefore social enterprise is filling a very important gap in society to take care of things that need to be done. At the same time, they do it with a business sense. So as opposed to, let's say, an NGO in a non-profit that purely is based on a grant model, social enterprise is living right in between those two worlds. On the one hand, it is taking care of or addressing a certain social or ecological need, but at the same time, they're doing with a business model that is really driven to make revenues and to really operate in the market. So it's a very interesting way of looking at the world. That's something that is not purely business, and at the same time also not purely non-profit. The goal of these social enterprises is to have both an impact, and we can talk more about what that means. It's kind of a big topic, and at the same time a financial return. The financial return at the moment typically is either market rate or below. It depends very much on the kind of sector we're looking at, whether it's renewable energy or whether it's education. So it depends on the sector, but also depends on the market environment and obviously the quality of the venture. Typically returns are around 5 to 10%, can also be below 5%, in some cases above 10%, but this is pretty much where we're working on at the moment. There are different philosophies in terms of what the relationship between impact and financial return is. And to give you an idea, there is this conception in the broad market that if you want to achieve a financial return, you can only do this if you sacrifice impact, or if you want to achieve an impact, you have to sacrifice financial return. And I believe that in most parts of the world that this is still the case. Although there are some parts of the world that already operate in a positive correlation between the two. So if you're actually doing better for society, you can also make more money, and we are moving towards that a kind of a scenario where we are increasingly seeing where people who do good things can also make money. And we believe that ideally we need to move to a state where the world will be more or less driven by that, where people say that you cannot make money without also doing something to change the world towards the better. I would leave it here, but I think it's basically still a young phenomenon, social impact investing, and we'll give you more examples in this presentation. Next slide. Social innovation is not a new thing. Actually, it's been going on for quite some time. One example that people may not be aware of is Wikipedia, which is basically a social business. It's a business that is driven, by some parts revenues and certain, grants, but it's basically trying to improve a gap in the market and at the same time to live in a commercial setting. We believe that social innovation is actually a significant market opportunity, and even though the market is still quite small, it is presenting itself as an important opportunity for investors, but also for enterprises. Okay. One of the challenges for such social enterprises is that they don't fit into the typical modes of funding, either for the non-profit side, where people are relying on grants and do not really provide any return and typically have a short-term horizon. And on the other hand, the commercial side, where companies basically have a market rate return, and in many cases also have exit options, basically through an IPO or through a trade sale, where then investors typically achieve significant returns, which then make it worthwhile to take certain risks, as for example in the case of venture capital. Whereas social enterprises, they fall really in between those. And one of the challenges is also in terms of mindset, that people are not really used to this kind of interim mode, and investors still have to learn how to deal with this, that there are moderate returns rather than exorbitant returns of the sort of the Uber world, and at the same time there are fewer exit options for various reasons, because these businesses may not lend themselves so much to, let's say, an IPO, even though this could change in the future. And so this is kind of a hybrid case that is still trying to find its way of being accepted and to have a space in the mindset of the participants. Okay. So now briefly about FASE. FASE stands for Financing Agency for Social Entrepreneurship. We are based in Germany. We are actually a spin-off of Ashoka Germany since 2013. So we've been operating for over 5 years, which is either long or short, depending on how you look at it. It's short in terms of the social impact time, which is only relatively recent. But it's also long in terms of what we have already come a long way. We are thus far, I would say, the leading European financing agency for raising growth capital, certainly in continental Europe, and the only one in Germany. And we can proudly say that we have achieved quite a bit in these 5 years. We are aiming to basically create an open pipeline of investment-ready social enterprises throughout Europe. We have good cooperations with the European Commission, for example, where we are mandated and supported in order to create this pan-European approach and to create deals across countries and across borders. Thus far, we have closed over 40 deals in the financing of social enterprises, and we have raised over 20 million euros collectively. We are working with a very large network of European investors, philanthropic or impact-oriented investors. In fact, this is over 1,000 companies already to date, and we bring these companies together with these social enterprises to create these opportunities for funding. And I'll give you some examples later on how we do that. Maybe next slide. One of the challenges in the market, and which at the same time is also our mission, is that there is this financing gap in a certain at the life cycle of the enterprise. So in the early life cycle, where enterprises need approximately up to 50,000 euro, this is typically done in a fairly straightforward way through some, startup funds, some seed funding, maybe family and friends, and this is typically something that is quite achievable. And also in the later stage, above 500,000, there are certain funds, social venture funds, for example, that will look at these cases once there is a certain proof of concept and sufficiently large revenues that really support this case, when it comes to scaling. But this middle ground, somewhere between 50, 100, up to 500,000 euro, this medium stage, level of development is very hard for companies to get financing. They're kind of in this death valley, as it's called, because they are too big for this friends and family funding or for the seed funding. At the same time, they're too small for the larger scale social venture funds. And that's why FASE is specifically trying to support this particular segment in the market in order to make sure that the market can grow and develop, and to basically provide this to address this financing gap in the market. Okay. What we are offering to social enterprises, since we're a financing agency, again, we are not a fund ourselves, even though we are actually currently raising a fund together with the European Union. But our core business is basically, on the one hand, investor readiness support. This is something that is very important because a lot of social enterprises are not really so used to having, this, to dealing with investors, what kind of documents are needed and so on. And so we help them to go through this to make sure that they're really ready and able to talk to investors. Secondly, transaction management, which is basically to support them with setting up a financing strategy, how much money is really needed, what kind of instruments are best, what types of investors are needed, and so on. So like a whole range of processes that supports them basically through the entire process, hand-holding them until the investment is closed. And I can say that in terms of the combination of our skills, on the one hand, this kind of corporate finance ability, and at the same time dealing with social enterprises, I can say the intersection between those two is something very rare in the market, and we are quite proud to say that this is something that doesn't really exist so much in the market. And as I said, we have a very strong and growing network of investors that we are working with and that we're basically bringing to the table to support these deals. Next, I realize that I'm not as fast as I want to be, or there's many slides ahead, so I'll go quite quickly. These are just some of the examples of companies that we have supported in the past. Actually, this slide is not yet complete. That's fine, you can go on. We're also working with a large number of partners of different types and kinds, and I can proudly say we're really part of a family of social impact investing participants throughout Europe. It's not a big family, but it's fast growing, and we are very well connected with these different players. Next, now some examples of how financing and financial structuring can play a role. I don't want to be too technical, too theoretical, but basically, as some of you may know, from your finance background, that there are basically two scenarios for an enterprise. Either you, at some point, reach a break even, which means that your revenues are higher than your costs, and then you make a profit. And whether that's 1 year from now or 10 years from now, but that's something that companies are trying to achieve. But there are other companies that don't necessarily achieve this, maybe because they have more costs than otherwise or warranted in order to achieve something that's otherwise not doable in the market. But there are some very interesting innovative models on how this can be supported. The first way how this can be supported is through a hybrid model, where you basically have a venture that has two legal entities. One would be for profit, and the other one is not for profit or non-profit. And so the business is structured in a way that the non-profit entity can receive grants and is taking care of activities that are not really profitable or don't receive any commercial revenues, whereas the for-profit arm, the for-profit side, could then receive equity or mezzanine or debt funding. Another interesting innovative financing tool is basically paying for success mechanisms, where you have certain mechanisms such as social impact bonds, where basically the venture receives milestone payments for achieving social impact, in terms of certain success criteria, which will then support them, financially. Next slide. One of the mechanisms we use, and one of the instruments we use quite a lot, is mezzanine financing. Mezzanine financing is something that is sort of in between equity and debt. Equity is basically where an investor takes shares in a company, whereas debt is where they provide purely a credit. But mezzanine is an interesting model which stands somewhere in between, and is actually very flexible and dynamic instrument that can be tailored to the enterprise. It can be tailored in terms of the duration of the payback, in terms of the triggers. Maybe there's certain operational triggers that the company would perform before certain payments are done. So you can play with this and create some very interesting ways of helping the enterprise to do its business without being burdened by these interest payments, and at the same time you give the investor certain comforts, such as, for example, a convertible option or the option to be repaid in a way that is also comfortable to the investor. So without going into further detail, this is just an example of that's an important instrument that is being used in venture philanthropy, which is mezzanine financing. Okay, some example cases. I think one of the cases we would like to talk about a lot is a case called Discovering Hands. And the reason why this is such a nice case to illustrate it actually has a double impact. This is a company that has been established a few years ago in Germany, and it is trying to do two things at the same time. Because of the fact that blind people, or people who have been blind for a long time, have a very good tactile sense in their fingers. That means people who are blind are much better at detecting things. For example, you can detect breast cancer during the examination. And this business is trying to do two things at the same time, giving employment to blind women, and at the same time giving a better result in terms of early detection and therefore lower healthcare costs to the patients and to the healthcare system. This is a very nice case of an innovative model of how you can help a certain part of the population, which means blind women who otherwise would have a very hard time to find good employment, and at the same time having an innovative way to support the healthcare system. And FASE has supported this business twice with funding, and they are doing very well, and they expanded into India and Colombia and other markets, and we supported them with hybrid finance, both mezzanine and grant financing. Another example is Team U, which is a business that supports companies that go into bankruptcy, which is an unfortunate but also very common thing, especially for small businesses. And this team themselves have been through the process of bankruptcy, so they know how it is, and they have this combination business of providing consultancy to small businesses that are in this situation, both on a sort of a for revenue basis, but also in terms of free consultation. And they are also an Ashoka fellow, and they've done very well thus far. And then the third example is Social B, which is an agency that helps refugees and migrants who have, for example, right now in the German market, have received a lot of attention because they are coming from outside, and they have certain challenges to be really accepted into the labor market for various reasons. And this company Social B is basically taking on these refugees to give them long-term employment contracts, and then to rent out them on a temp basis to companies. And so these companies then have lower risk of engaging them because they are on a temporary basis, whereas the refugees themselves have the stability and the comfort of a long-term employment contract, so they also benefit in terms of their stability. And if these companies are happy with what they have seen, then they can also employ them, and take over their employment contract. And again, we have supported them with funding, and this is just some examples of companies that we're working with. Maybe very broadly, FASE is working with, that's fine, you can also go to the next level. FASE is working with companies from a very broad range of social impact. So we are basically looking at the entire range of education, inclusion, gender equality, employment, but also ecological and environmental and energy topics. So we're looking at the broad range of the United Nations SDGs, the criteria that basically are have been defined, and so we're completely open to all these different cases. And the last slide, just to give you an understanding of the kinds of companies we're looking for. The most important, or not the most important, the most simple maybe to identify is that the company has to be domiciled in the EU. That's something we are doing out of our mission, also the support from the European Union. The market focus of these companies either is Germany, Austria, and Switzerland, which is called the DACH countries, or Benelux countries, or Eastern Europe, either currently operating there or planning to scale into these markets. So for example, if it's a business is from Italy, but it's also planning to expand into Germany, for example, then that would be a business that we could support very well. but at the same time, the B option is where the company is domiciled in the EU, but is working with a market focus on emerging markets, for example, in Africa. So we're currently supporting a social enterprise from the Netherlands that is based in the Netherlands, but that basically entirely works in the African subcontinent, it's sub-Saharan Africa. So these are the two options in terms of the market focus. Business model has to be significantly based on commercial revenues as opposed to grants. An existing proof of concept is very important. So first revenues is a must-have. Unfortunately, we receive a lot of inquiries of people who are coming to not quite there yet. So we have to say, please come back when you have some first revenues. Significant scale potential. This company has to be able to scale in the market rather than having just a one location shop. The offering has to be sufficiently innovative in terms of its USP. Break even 3 years or less, otherwise it's kind of difficult to support this with our investors. And the impact has to be strong and measurable, either socially or ecologically, and the funding need 100,000 minimum euros. And I realize I've talked very fast, and I just am 2 minutes over, and I hope everybody could hear me well, and I'm very happy to discuss, and I'm looking forward to your questions.
So thank you, Martin. That was extremely comprehensive, and it's great you managed to cover everything within the time given. So without wasting any more, we will give the floor now to Peter and Martin. Tim, my apologies, Martin and Tim, who will go over SI2 Fund. So floor is yours.
Thank you. Hello to everybody, and thank you to EBN and EVPA for the invitation and for the opportunity to present ourselves. We'll do a dual presentation to make it a bit lively, do it alternating. First introduce myself. I'm Peter Ooslander, and am the fund manager for SI2 Fund. After career in auditing and in financial positions in businesses, I got into the impact investing space about 15 years ago, and since 2015 fund manager for SI2. Tim?
Good morning, everyone. My name is Timothy Lambert. Like many people of my generation, I'm very passionate about I feel responsibility to contribute in solving some of the social problems our societies are facing, and I'm really passionate about addressing these problems using tools like social entrepreneurship, impact investing, and a crystallization of this passion is my commitment for SI2 Fund. For the last 3 years, I've been involved in, based in Brussels, and involved in the deal flow management of SI2 Fund, from sourcing leads to preparing investment proposals and delivering coaching services to some of our portfolio companies. Maybe Julie and Lena, we can go to the next slide. So we'll take the opportunity today to go through 3 points. First, we'll briefly introduce SI2 Fund, why we exist and what we do. We'll then explain our USPs, or what we think is our added value to the market, and finally we'll highlight a few points that we consider important when meeting entrepreneurs, social entrepreneurs, for an investment. Next. So who's SI2 Funds? Let's start with the why we exist. So we have to go back to 2012, 2013. Peter and Piet Koolhuis had met or gathered several families and foundations around the table that were all committed or willing to do something meaningful with their money, invest sustainably, so go a bit away from the traditional philanthropy, but really invest in companies, but with the purpose of generating a high and measurable impact. And they were looking for a team of people who were who could build a pipeline and prepare investment proposals to allocate this money to this company. So SI2 Fund is basically addressing a funding gap for social entrepreneurs that are slightly too big for philanthropy funding, but still too small or too unattractive for traditional financing, and so supporting these entrepreneurs with investments from foundations and families. Our mission basically is to allocate capital, but also not only financial but also human capital. So we are, as Julie explained in the beginning, we fit well in the VPO approach, in the venture philanthropy approach, because we're very hands-on investors contributing beyond the financial investment. Our purpose, our ultimate goal is to generate a significant social impact alongside a fair financial return. We'll come back to these terms a bit later. We can maybe go to next slide.
Yeah. So Martin already did a nice job of explaining social investing, and I'll use this picture to articulate it a little more and to position SI2 Fund with it. This spectrum shows the range of different organizations that you can see nowadays, and ranging from the left-hand side, the organizations based on grants or investing for impact only, not to make money or even get their money back. And at the other side, like traditional market mainstream companies that have as a main purpose to generate financial value. In between those two extremes, there is a range of different organizations. Some of them can generate some income, but are partially dependent on grants. Some can cover their expenses, and some can make a profit while still focusing on, while primarily focusing on a social challenge. And this group, which we call socially driven businesses or social businesses, that have as a primary product or service something that addresses a social need, and can do this on a for-profit basis. Those are the investment targets for SI2. This is where we can be of help to help them grow and scale. Next. SI2 Fund itself, I think basically easy to say it's a traditional venture capital structure, albeit that we don't have the traditional venture capital focus, which is making maximum money for its investors, and SI2 is chartered with making maximum impact and returning the money to its investors, or returning the money with a decent plus. The fund, as Tim already said, is funded by families, high net worth individuals, and foundations. A couple of Dutch foundations have allocated part of their endowment into the fund as an investment. Bit of a hybrid also between their traditional way of investing their endowment and generating money to make donations. This is an in-between that will make money and impact. The fund has started approximately 2013. The size at that time was quite sizable for a social investment fund, and we are currently in the medium-sized funds with a 17 million committed capital. The fund lifetime is long because the typical social impact investments usually need more time to grow and scale. So the fund term is 11 years, and we have the possibility to extend that with another 4 years. Our investments range between minimum 250, maximum 1.5 million, 250K. The minimum isn't that sharp, we could start with even with a bit of a lower amount, as long as we can see that potentially the venture will need more money, and our investment can grow into this range. Our typical funding model is equity or quasi-equity, and there is a simple logic for that. We know that we can lose all our money in an investment, and we therefore need also the opportunity to have an uncapped return. So we like to be in the venture as much as possible on equal footing with the entrepreneur, which equity best suits. We are maybe unlike, although venture capital is usually also looking for minority stakes, we are not like private equity trying to get majority control over the company, but we want influential minority stakes, usually with a board seat or a non-executive role with the company to support our engagement. Next.
Yeah, so the type of investees or SPOs which are of particular interest to SI2 funds are businesses that have a very clear mission to tackle a pressing social problem, and that this mission is well integrated in their business model. Our investments are mainly focusing on the Benelux region, Belgium, so Benelux region, but also we are also considering investments in the UK. We have 3 portfolio companies active there. The stage of the companies in which we typically invest is non-seed. So these are companies that are generating commercial revenues already, but they are not yet profitable. They have validated that there is a market for their product or service, but are still some miles away from making a return on their activities. And so we invest, as you can see on the charts, we're between the early stage growth and later stage growth phase of companies, SPOs.
Next. Okay, so what can you expect, or you social business, what can you expect from SI2? A few slides. First of all, an experienced and dedicated team. We are with a team of 7 people active in investment management. We do the sourcing and the screening of leads, and the due diligence and the contracting and the following up of our investments. The team has it has a mixture of experience in operational management in different industries and sectors. We have team members in strategic consulting and in analytics. And all of us, and the previous experiences are across the team, all of us are experienced in impact measurement and management. We are, sorry, just one more thing I wanted to say about that. We, as Tim said, we are focusing on the Benelux. As we often say, our scope is Europe. And our focus is on the Benelux. It doesn't mean we are not willing to invest in companies outside the Benelux, but we like them to have a link one way or another, or the plans to expand into our geography. And so we say we focus on the Benelux and adjacent countries. So we have investments in the UK currently. We could invest in the north of France or in the north of Germany if there were interesting opportunities. And the team is spread across Benelux, and also one of our team members is based in London. Next. Yeah, so the first thing that the team offers, I think, is high engagement. We will be very engaged with the companies where we invest in. We think along on a strategic level. Usually that's done through participation in the governance. It can be a supervisory board role or a non-executive board role, or if there is no such thing, we create or we maintain another way of being in touch on a very regular basis. Depends on the need, of course, but monthly is maybe the least frequent, and weekly and sometimes every day contact is possible. Through the team, we provide experience to the knowledge in the team. So if there is knowledge needed from strategic consultancy, we link the relevant team member, etc., etc. And we can provide access to our networks. Our shareholders are usually also knowledgeable in fields, are families owning businesses that have particular experience or networks on their own. And where applicable, we make those connections as well. Next.
So last but not least, I think if there's one point which makes SI2 Fund stand apart is the importance and the energy it puts in supporting the social entrepreneurs in measuring and managing the social impact. We are convinced that this measurement not only serves the purpose of reporting figures to investors, but more importantly, can also support the entrepreneur in creating more value to its customers and stakeholders. So what we do concretely is supporting in making a baseline impact measurement using or applying principles written by Social Value International. It's an international organization that is trying to develop standardized impact measurement approaches. We're also helping the entrepreneur in setting up a reporting system, which is a lean, not eating up the time he needs to build his business, but lean, but leads to valuable insights. So also creating dashboards that are really oriented towards taking better decisions, better informed decisions. Yeah. And finally, we translate this measurement. We help translate this measurement into impactful communications, communications towards partners, towards clients, investors, but also we help build these KPIs, these impact KPIs in incentive schemes, be them from management incentive schemes, their bonus on what it's tied, etc.
Yeah.
Next.
Okay, so if we look at companies, we have 3 more minutes, if I'm correct, so we have to speed up as well. We'll highlight 4 elements that we find important when we look at companies. So if you have in your portfolios organizations that meet those criteria, we would be interested. The first one is they need to have a high and measurable social impact or societal impact. We say specifically societal impact because also environmental type of impacts are clustered under the same name. I think we have spent already quite some words on why we think this is important. We see that being serious about your impact helps the social business to deepen their own insights, be more resilient in their growth, so they are more ultimately more stable, better networked into their fields, and if they do it well, they have more support from stakeholders to survive. Or not survive sounds on the negative side, but to prosper and growth. grow. Next, please. Of course, you need to do that with a viable business model. If your approach to a social issue, a social challenge would be a total sacrifice, then you're not an investee for SI2, because in the end we need to see a for-profit model as a basis for the work you do, and to enable us to recover the money after we've helped you grow and scale and made a successful exit.
Mm-hmm.
Next. Yeah.
So another important feature or characteristic we're looking at when considering an entrepreneur is to what extent the impact is integrated within his business model. What this means is that the commercial activity, the source of commercial value creation, needs to be positively correlated with the source of social value creation. We'd like to see businesses where the chances that we need to make trade-offs between both objectives are minimal, and so this is a very important criteria we're considering. We can go to the next one. Oh yeah, maybe I should. Yeah, no, it's fine. We can go.
Yeah, maybe one thing to say about that business model. It's nowadays it's called the lockstep model. We think integrating business and impact is a more clear way of saying it, but that is thinking about the trade-offs. But so if you integrate the two things, the chance of having to trade off between financial and impact is smaller, but it is almost never zero. There will always be crossroads where you need to choose between development area where you're going to make more money and maybe less impact, or where you will be making more impact and less money. What we do with our impact management approach is to identify those areas where financial improvement, financial return, and impact go hand in hand. Yeah. And our final criteria, last but for sure not least, is that we are looking for organizations, or that we want to see good teams. Yeah, entrepreneurship is not a one-man or one-woman show. It's something you do with a team. We are, well, I wouldn't say that single entrepreneur is a no-go, but it is very close to it. We would be very wary of investing in a social business that has a single entrepreneur and no management team. We'd like to see an entrepreneurial team that really fits with the mission and is inherently driven for impact. Yeah, of course, complementary, good team fit, open-minded, open to advice, and fit for the stage of the company, and preferably for the next stage. But for the stage itself is the most important one. And the next leads into questions, if you have them. Thank you for your attention anyway, and feel free to approach us or to subscribe to our newsletter. Thank you.
Excellent. Thank you very much, Tim and Peter. So this completes our presentations for today. At this point, we're opening up the floor for questions, doubts, clarifications. The idea is really to provide EBN members the opportunity to engage with the speakers from today and clarify anything that their presentations might have sparked in terms of questions. So what I would do is, so please raise your hand and I will unmute you. And then in this way we can take questions in an organized manner.
So I only have one question, and I will give the floor to Corentin. I'm sorry if I don't pronounce the name correctly. Corentin de Trejomain. Clarelisa, if you can unmute.
Yeah. Okay. Corentin, you're unmuted. Hello?
Please go ahead with your question, Corentin.
Hi, good morning. Thank you very much for this super presentation. My first question is, can we get the presentation somehow?
Yes, we will share this right after the webinar. We'll share the presentations and also a small summary of what the presenters have just told you about. So all this will be a follow-up.
Thank you. And I have another question is I would love to get involved. And is there an easy way to, like a few steps to start getting in contact with both organizations? Or is it just to call them?
Yeah, I mean, the idea is essentially this. Once EBN members have understood how these funds are operating, now you can get in touch with them directly. The idea is that having understood their criteria, you can start to think of any entrepreneurs that you're currently supporting that could be a good match with the criteria presented. And at this point, you can go ahead and contact them.
Thank you very much.
Thank you, Corentin. And actually, if our speakers have anything to add to that, perhaps I could ask a question to both of them that could facilitate, let's say, could help our members understand how to proceed. So the question would be, where do you usually find your investees to build your pipeline, and why? And essentially, I would say the objective is that EBN members can start to link with these funds to help provide this pipeline. So if any of you, Martin or Tim or Peter, want to take this question, perhaps it can help our members understand what's your usual approach when scouting investees.
Shall I kick off? It's Peter here. Sure. Yeah, our usual approach, or the way we find potential investment opportunities, is through incubators and accelerators, and through our network, of course. So people that know what we are doing and that feel that that they see an opportunity that might fit. And yeah, to add to what we've said before, I think we have no, and we haven't mentioned, we have no particular thematic focus because we have a more or less geographic focus. We don't want to slice the market too much, although we have a preference for people topics. So theoretically, we can also do environmental investments, but in practice, our portfolio consists of companies that address people needs, and yeah, we are in touch with several incubators and accelerators that focus on impact, but we're also very open, because you see the impact concept more and more often also into companies that do not consider themselves social businesses, but they actually are when you think about it. And so.
Great. Martin, do you have anything to add to that? Or we can go on to the next question. Martin?
Martin, I think you have to unmute your microphone if you want to tell us.
Okay.
Yes, I can now. Okay. Yes, very good question. We are also challenged by this, because on the one hand, there's quite a broad range of different sources, and we're working with different partners, accelerators, funds, personal contacts, but we also visit events. And for us, it's also a challenge where to look for. And we are also, just as was mentioned just before, looking, basically fishing in different ponds, so to say, because we also believe that impact can be achieved by companies that may not call themselves social impact businesses or social entrepreneurs. And so we are also quite open to looking in places that maybe are overlooked, and hopefully to find suitable companies. It's an ongoing topic for us, because we also always look for a quality pipeline, and it's not always easy to find the right companies at the right level of development. Sometimes they're too early, sometimes they're too late, and so for us it's always an ongoing issue, and we're always looking for strong companies that are at the right time of development.
Mm-hmm. Thank you, Martin. If I may add to this, as you've both said, sometimes there are, well, actually very often, companies that are not even aware that they have a social impact within their company's activities. So we know that a lot of EBN members have these type of cases within their deal flow. And essentially what we'd like to achieve at the EBN EVPA level is to ensure that our members, EBN members, can, I would say, bring out this aspect within those entrepreneurs that they're supporting, help them to, I would say, identify it and develop it, and at this point then link them in the direction of the impact funds. And this is where we see a valuable connection in the two type of networks working together. I will go on to another question we have from Claudia Morgado. So I'll read it out for you as you're in a co-working space. There's a question for Martin. She's wondering whether you also feel that supporting solo entrepreneurs is not a viable option.
Yeah, not an easy one. A friend of mine is a solo entrepreneur, and he's struggling, and he has a very interesting business, and he's looking for a co-founder. And sometimes it's not easy to find a co-founder, because businesses are very personal. It's a very much about passion and subjective belief in something that you believe, something that others do not believe, in the words of Peter Thiel. Not necessarily to be contrarian, but how do you find someone, if you're already on your way and you haven't found someone who can fit and be with it? It's difficult because it's very personal. It's about chemistry. But I would encourage you to find people who would be willing to work with you. I would say that to answer your question specifically, for us, it's not a complete no-go, but the other factors would have to be very strong. So it would have to be, factors that would compensate for this, I should say, maybe shortcoming, such as very strong partner companies, a strong network of other stakeholders that support you, maybe a strong advisory board, maybe a strong board of other people who sort of mentor you and support you informally. So if you have that, and finally, of course, sometimes companies have people who are in the pipeline who maybe they cannot afford to pay, who would not be ready to join the team in terms of their risk profile, maybe because they have other criteria in terms of their life, but who would come on board once the funding is in place. That's also sometimes a common mode, and of course there it would be good to show this as positive as possible in your business plan, that this team can be ready to go as soon as the funding is in place. And that's also sometimes an art and a science to have these people lined up at the same time. Of course, they're not yet working for the company, and that sometimes can be a challenge. So I would say it's not a complete no-go, but it's definitely an uphill struggle.
Okay, thank you. I see Claudia had another question, this time for SI2 Fund. She's wondering whether Benelux has to be actual focus or maybe future. So I think from my understanding, Peter, you said that it could be a planned activity to expand in Benelux, but perhaps you can confirm this.
Yeah, so we don't draw the line very strict. As we know that the opportunities that we're looking for are not manifold, so we need to be flexible in where we go. And the scope is Europe. For instance, we are looking at the company in Portugal that has an interesting model and is expanding into the north of Europe, also in Belgium and in the Netherlands, and that would be interesting for us. We could make the investment in the Portugal entity, for instance, but then focus on helping them in the Benelux area, because this is where our networks are, and and we are the best suited. So I think those cases would be win-win for those companies. We would help with capital, but also with our in-kind support. And for us, that is also the most interesting one. So Benelux, we are not looking for formal location in the Benelux. That is not needed, but it should have a link somehow.
Okay. Great, thank you. We have a question from Patrick Nicholson. You are unmuted. Patrick?
Yes. I don't know if they can hear me or not.
Yeah, we can hear you. Go ahead.
Oh, sorry. Okay, good. I just wondered, we're based in London, and your criteria is about domiciled in the European Union. Would that still be would that be a factor that would limit our chances to be involved in the program?
Is this for both funds, I suppose?
Sorry? Yeah, it's collaboration, and but also could be, in other words, could we bring potential social businesses into the program who are based in the UK or in London?
Well, if I can answer very short for SI2, no problem.
Okay.
Of course, we are a little nervous of what's going to happen with the Brexit, and we are very sorry to see you go. But we have 3 weeks ago we closed our third investment in the UK, and it's not that because Britain will be outside of the EU that for us it's not a target market. Yeah, it is. Yeah.
Yeah, for us too, it's a somewhat challenging environment right now. I think if there is a potential to scale into other continental European countries, then I would say that this is a much better scenario. If it's UK only business in terms of its ambitions, then I would say, unfortunately, we would not be the right people.
Okay, thank you. So being conscious of time, and if there are no other questions from the attendees, perhaps I will ask one last one to our speakers. And could you please tell us a element, or I would say top 3 investment criteria that makes you go forward with an investment, and to counteract this, a deal breaker that for you would stop you from investing in an entrepreneur? I think this can help our attendees understand some of, let's say, the silver lining with the relationship that you build with your investees, and also the approach and some of the elements that for you are very important when establishing a new connection. Maybe we can start with Martin and then go on to Tim and Peter.
It's a hard question because there are many criteria, and to give you one would create a distorted view. I think if I had to absolutely choose one criteria, would be the quality of the team, because it affects everything else. It affects the quality of the business and so on. But it's a bit of a cheap trick, because then it's kind of a meta criterion. But if I had to pick one criterion, I would say the quality and experience of the team. Deal breaker. Well, a simple one is just if it's outside the EU, then we just can't do it, unfortunately. But another deal breaker is basically if there is just no impact. The company can be as profitable as it wants to be. If there is no impact, then for us, that's unfortunately something we will not support. So it's a hard question, and I try to do the best I can. So there you go.
That's excellent. The idea is to give an indication. I think obviously for different funds it will be different things. So Tim, Peter, if you can tell us your view on this.
Yeah, it's very similar. I think we highlighted the 4 main criteria for our investments in the presentation. If I need to narrow it down, or if I would say what is the top deal breaker, is if the entrepreneur or the team are not fit for the job, then it's absolute no-go for us. The integrated, and again, the impact is key important. As Martin said, you can be as profitable as you want to be, but if you make no impact or no or no tangible impact, then it's not an investment for us. If I would need to narrow down from the 4 we mentioned, I think the first one is a high and measurable societal impact. Well, the high impact needs to be there. Measurable is sometimes difficult. We have a strong preference. Actually, we need to see how measurable things are, but this is the area where we, if we have enough indications about the level of the impact, and then we may be a bit soft on the measurability, but preferably not.
So I will just add one very last question. This has been suggested by EVPA, and I think it's something that would be important just to close up with this. And it's how often do you meet potential investees that have a clear theory of change? So the theory of change is something that we're seeing a lot now in philanthropy, which I would say, or I would be inclined to say, not many incubators or accelerators are so familiar with. And so how often do you meet investees that have this as a clear element in their company? And how do you do to help these investees build a theory of change? Anyone would like to start?
Yes, this was for EVPA, wasn't it? Or
yeah, so essentially with EVPA, this is something that they work with. I'd say it's their core business, essentially working with companies to establish a theory of change. And it's something that can help then the entrepreneurs themselves to build a business around social impact driven results. And the idea is that we'd like to get EBN members to get the entrepreneurs to think about this, so that once they come to the social impact funds as yourselves, let's say, then the connection can all be more, I would say, facilitated. Lena or Julie, do you have anything to add to this?
Yes, actually, the reason that we are asking that question, as Clarissa was explaining right before, is that since some of the people who are participating in this call, whom some of them I already met in previous, let's say, events with EBN, always were asking me the exact question of impact and what do we mean by impact and how important this is. And since I know FASE and SI2 Fund quite well, and knowing exactly, let's say, what you do and how much you put importance on the impact, we were thinking that it's maybe, let's say, important to explain what do you do on the situations where you see a clear impact, but there is no theory of change and the entrepreneur is not really familiar so much with the impact that they're actually generating. That's why we put this question forward.
Okay, now it's clear. Sorry. Yeah. I think we can. Well, Tim, go ahead.
Yeah. So basically, I think there are many entrepreneurs that we meet that are not coming spontaneously with a clear vision on their theory of change, or if in human terms, how they can, with their company, how they are about to create positive social change. So one of our responsibilities as impact investors is to assess, evaluate the potential on a higher level basis, and from the point where we have sufficient confidence there is potential, that we work with the entrepreneur on clearly articulating where are the sources of social value. And this is something we do, for instance, during our due diligence process. So once we're preparing an investment proposal, we're closely working together with the entrepreneur, and sometimes involving stakeholders like clients or partners of the company, to together discuss what are the positive and negative impacts of the company on stakeholders, and from there try to nail down a few key impact goals. So what is it then that you as an entrepreneur and you as a team around the entrepreneurs are aiming for, and what are your goals for the next 3 to 5 years? So this is typically an outcome of sessions that we organize with entrepreneurs to discuss this. In some cases, in some cases, it's also something we do right after making the investment, after we've done a very thorough measurement of the impact, that we dare identify the 3-4 key impact indicators and agree with the entrepreneurs on concrete goals to achieve for the coming year.
Okay.
So if I may add there, this is the issue that we very often encounter. We use the SROI framework, which is a logical thinking framework, and when we screen a lead initially, we make a high-level assessment of what we think the impact will be. But this needs to be deepened, and it's very important to us that the social impact measurement is to the benefit of the social business of the entrepreneur, and not to us. Of course, we will use the data, but it needs to be something of added value to the company, and it needs to be, let's say, it needs to be something that is owned by the company and not top down pushed on it by us, because if that's the case, then it wouldn't work in the longer run.
Mm-hmm. Okay, thank you. Martin, would you like to add anything?
Yeah, it's a difficult one, and it's kind of philosophical in terms of intention versus outcomes for impact. We definitely want to see a clear intention, and if there is an intention, then I think it should also come along with a certain effort that is made to really materialize the impact model. I understand that some companies may be too busy to go into the specifics of a theory of change, but we want to see at least a potential, that there is a potential to develop this theory of change sufficiently clearly, maybe without spending too much resources on it. So it's kind of it varies very much on the company, but we want to see at the very minimum the effort that is made to really show how this can work. And then we would try to work with the company to some extent, but we also can't give them like a full coaching, and we would then refer them to other partners that can help them. But it's kind of a judgment call, and it varies on the case-by-case basis.
Okay, thank you. So I see we have another question, but unfortunately now we really have reached the end that we have set for this webinar. I would encourage you.
I think, I'm sorry to interrupt you, but I think we can give just 1 minute, because I feel that this question is quite important, let's say, to answer. So if I'm not ruining completely the time of everyone, we can have like the last question promising, if you want to read it.
It's fine, no problem.
Thank you.
Sure.
Thank you very much.
I'll read it for Claudia. What do you both, FASE and SI2, think about businesses that already have a focus on impact but need to improve their metrics or methods on measuring it? Does this have to be put in place previously?
Yeah, I'll maybe jump in. I think it's given the stage of the companies in which SI2 Fund invests, as we mentioned earlier, non-seed, but still in an early stage growth phase most of the time. The extent to which the entrepreneurs have put in place a thorough impact measurement and reporting system is quite limited. So we're not expecting entrepreneurs to come up with a fully fledged and up to standards impact framework. What we want to see is a clear motivation and drive for being serious about impact, that is generating data that will help the entrepreneur and the team of entrepreneurs in making better informed decisions. So yeah, for us, it's not a pre-closing obligation. It's something we work on with the entrepreneurs during the investment period.
Yep, same here. Couldn't have said it any better. I think the motivation and intention is really what's key, and it also depends on the sector. Some sectors lend themselves more easily to measurement without spending so many resources, because we also want to keep it economical for the business to not spend like too much time measuring all day long. So for us, it varies very much on the case, but I would very much subscribe to the same answer.
Great. So I think we can conclude the session for today. I would like to thank our speakers for their excellent presentations, very insightful and clear. Also thank EVPA for helping with the coordination and collaboration of this webinar. We will send their slides to the group. The session has also been recorded, so we can share this with you as well. And you can get in touch with both Martin, Peter and Tim to ask any other questions, or actually start to see if there's any potential for entrepreneur exchange. And at this point, I thank you all for your attention, and we'll keep in touch.
Absolutely. Thank you all.
Thank you very much for your participation, and thanks a lot to the speakers that were here to share with us their expertise, and of course to the audience who was really, really nicely pointing out interesting questions.
Great. Thank you. Bye-bye.
Thank you. Much appreciated. Bye-bye.
Bye-bye.